All right, let's get straight to it. We're here to break down what is, without a doubt, the single biggest transformation in enterprise software since the cloud. As we look at the landscape in 2026, the era of the AI co-pilot, that little helper that sits over your shoulder, is over. It's done. We are now deep in the agentic era, a complete reinvention of digital work. And for investors, well, this changes everything. So here's how we're going to break it down today. First, we'll define this new agentic battlefield. Then we'll follow the money and look at the hard financials. Who's actually cashing in? After that, we're going to dissect the tech moats, talk about the very real risks and headwinds, and then lay out the specific bull and bear cases for all the key players. And that will all lead us to our final investment thesis. So first up, let's get our bearings on this new landscape. You have to understand the game has fundamentally changed. We've shifted from helping people get work done to software that does the digital work itself. And let's be absolutely clear what we mean by agentic era. This is a huge leap past the AI that drafts an email for you to approve. We're talking about autonomous software agents that can handle complex, multi-step jobs from start to finish with little to no human oversight. This is not a feature update, folks. This is a fundamental change in how companies get work done. And this slide, this right here, illustrates the central conflict. For decades, all the value was locked up in the system of record, the giant database holding the single source of truth. Think SAP's general ledger or Oracle's financial data. But here's the thing. Agents don't just read data, they act on it. So the value is shifting, and it's shifting fast, to the system of action, the platform that actually owns the workflow. This is a war between the incumbents who own the data and the aggressors who want to own the work. All right, let's follow the money. How is this war playing out on the balance sheets? It is time to separate the real AI revenue from the marketing fluff and vaporware. Now, this scorecard is where the story gets really interesting, especially if you look at that last column, AI uplift reality. The market is finally separating the talkers from the walkers. You see Salesforce reporting a very tangible $1.4 billion in AI-related ARR. You see Oracle's backlog, their RPO, absolutely exploding because of infrastructure deals. But for others, like a Workday or HubSpot, AI is still more of a defensive move right now. It's about adding value to keep customers, not a distinct new revenue stream. At least not yet.
But, financials are always a lagging indicator. They tell you what happened yesterday. If you want to see who's going to win tomorrow, you have to look under the hood at the technology. The real war is being fought over three things: context, orchestration, and ease of use.
Look, an agent is only as good as the data it can access. And SAP's moat here is its incredible industrial knowledge graph. When you ask its agent, Joule, about a supply chain problem, it's not just scraping the internet and guessing. No, it is tapping into 50 years of deterministic, structured data about shipping containers, manufacturing lines, and financial processes. In a crisis, that reliability is an unbelievably powerful advantage. Workday's context is different, but, it's just as powerful. It owns the unique intersection of people and money. Think about a question like, can we afford to hire 50 engineers in London? To answer that, you need access to the general ledger and HR salary data. Workday is really the only player that has both of those things natively in a single data model. That gives its agents a massive head start on answering the most important questions a business can ask. Now, ServiceNow, they're playing a completely different game here. It's a meta game, really. They see a future where every company has hundreds of different agents from different vendors, creating an absolute governance nightmare, what they call agent sprawl. So their strategy isn't to build every agent. It's to manage them all. Their AI control tower is designed to be the single place you go to monitor cost, performance, and compliance for every agent, positioning ServiceNow to be the indispensable managers. Okay, but it's not all smooth sailing. Of course not. This kind of revolution is always messy. For a truly balanced view, we have to talk about the fear, the uncertainty, and the doubt that has been swirling around the market this past quarter. The last 90 days have been, let's just say, turbulent. Oracle got hit with a major security breach, which really shakes confidence in their whole sovereign cloud pitch. Salesforce got serious backlash from CIOs over their consumption pricing model, forcing them to pivot fast. And Workday, they had big leadership changes and layoffs, which always signals some execution risk. This is the fog of war. So, how does all of this translate into an actionable thesis for you, the investor? Let's break down the bull and the bear case for each of these major players. For Salesforce, the bull case is huge. They believe Agentforce is their iPhone moment, unlocking a massive new consumption-based revenue stream that could dwarf their old seat-based model. But the bear case? The AI tax revolt gets worse. Customers, fed up with unpredictable bills, start to churn and offload work to cheaper, more commoditized AI, and Salesforce's seat counts start to shrink. For ServiceNow, the bull case is crystal clear. As agent sprawl gets worse, their orchestration platform becomes the essential ERP for AI. They get to take a little tax on every single agent interaction. The bear case, though, is that truly autonomous agents might not need traditional workflow. I mean, if an agent can just solve a problem directly without creating a ticket, that attacks the very core of ServiceNow's value. The bull case for Workday is that it becomes the central bank of the enterprise. It's the trusted, secure system of record that authorizes every high-stakes HR and finance transaction that other agents want to perform. The risk, the bear case, is that they're seen as slow to innovate, and they just become a dusty old legacy database that smarter external agents simply query for data. SAP's bull case is all about gravity. The entire world industrial economy runs on its systems, which makes its data absolutely indispensable. The bear case, in a word, is migration fatigue. And let me tell you, it's real. Customers are just tired of these expensive, painful cloud migrations. And if they feel like they're being forced to upgrade just to get AI features, they might finally start looking for the exit. With Oracle, you're really betting on two different companies. The bull case is simple. They're winning the infrastructure war. They're selling the picks and shovels in this AI gold rush, and that massive RPO proves it. The bear case, however, is a trust deficit. If these security breaches continue to damage their applications business, they risk becoming just another low-margin commodity cloud provider. HubSpot's bull case is a classic disruption play. As Salesforce gets more expensive and more complex, HubSpot swoops in and wins the mid-market with simple, good-enough AI. The existential threat, the bear case, is that AI agents get so good that they don't even need a CRM interface anymore, which would make HubSpot's platform just a commodity wrapper around the core AI model. So, after analyzing the battlefield, the financials, the tech, the risks, where does that leave us? What's the final verdict for investors here in 2026? Who actually wins this war? The data, to us, is pointing to a split decision. It's a bifurcated outcome. There are really two fronts in this war, and that means there are two clear winners. Salesforce is winning the offensive war. They are building the agents that do the work, and they have the tangible AI revenue to prove it. But ServiceNow is winning the defensive war by creating the platform that governs the inevitable chaos this all creates. That insulates them from the risk of customers cutting seats. And that leaves us with this final thought. The initial excitement around building agents is quickly, and I mean quickly, giving way to the corporate terror of managing them. Governance is the single most important theme for the year ahead. So the question for you as an investor is no longer just who builds the best agent, it's who provides the control.